Hey everyone, and welcome back to the Quorum Stream, where we break down the news that truly matters. Today, we are opening up a brand new financial can of worms from the highest office in the land. The title of this video tells you the shocking number. Trump's new financial disclosure shows $82 million in bond purchases since August, including tech and banking giants. Now, $82 million is a massive amount of money to move in a 2-month window, but the true story isn't the cash. It's where it went and the absolute textbook definition of a conflict of interest it creates. Let me be clear, this isn't fake news or speculation. These figures are pulled directly from mandatory filings under the Ethics in Government Act. For those following Trump's financial life, this is a major pivot. For years, his wealth has been tied up in real estate and golf courses, the big physical assets. But since returning to the presidency in January and accelerating dramatically since August, he has become a bond buyer, snapping up debt from cities, schools, and most controversially, massive corporations. Why the sudden shift to fixed income assets? We're going to explore the financial strategy behind it, but first you have to hear about the two companies that make this story a legitimate political earthquake, and why you should care about this more than any campaign rally. We're talking about direct overlap between personal profit and government policy. Now, before we get into the heart of the scandal, if you value this kind of deep, fact-based news, please take 1 second, hit that subscribe button, and tap the bell so you don't miss our next deep dive. This is the first bombshell, and it's a pure, unadulterated example of a policy-to-profit question. Intel. The financial disclosure reveals that Trump acquired bonds in the chip-making giant Intel toward the end of August. On its face, it's just one of 175 transactions, but the timing is what makes your jaw drop. Just about a week before this purchase, the U.S. government, the government he currently leads, sealed a deal to acquire a significant ownership stake in Intel, nearly 10% in some reports. This was not a routine investment. It was an unusual market intervention justified by the administration to boost domestic chip manufacturing and independence. So put yourself in that chair. You direct the U.S. government to make a strategic move that fundamentally boosts a company's financial stability and importance, and then, days later, bonds from that same company show up in your personal portfolio. As a bond investor, what do you want? Stability. You want to be sure the issuer can pay their debt. When the U.S. government puts its weight, and effectively its guarantee, behind a company like Intel, it makes those bonds safer and more attractive. This is the blurring of the line between personal wealth and presidential power that ethics watchdogs, who cite this as a clear conflict, have been warning about since he took office without fully divesting his assets into a blind trust. It raises the unavoidable question, was this investment based on genuine market strategy or on privileged knowledge of his own administration's actions? This one data point is enough to justify the full disclosure, but trust me, we're just getting started. Our second company is JPMorgan Chase, one of the biggest banking giants in the world, and this story is even more bizarre because it's a study in contradictions. The filings showed that Trump's investment portfolio picked up JPMorgan bonds in late August. Now fast forward just 2 months later to October, and what happens? President Trump publicly and explicitly called on the Justice Department to open an investigation into JPMorgan over its historical business connections to the late financier and convicted sex offender Jeffrey Epstein. Wait a minute. Think about that sequence of events. You invest in a company's debt, betting on its stability and future, and then you, the president, demand that the federal government launch an investigation that could potentially destabilize that very company. This is an ethical and political paradox. If you truly believed JPMorgan deserved a federal probe, wouldn't you, or the independent manager of your portfolio, liquidate the investment immediately? The fact that the investment was made before the public call for an investigation, yet remains in his portfolio, creates a profound skepticism. Did he simply forget he invested in them? Or is the public call a political performance completely detached from his actual financial bets? This is why we need to unpack the White House's defense, which is always the next stop in this kind of ethics controversy. Let me know your initial reaction to this Intel and JPMorgan conflict down in the comments. I want to know which one of these connections you find more concerning. Now, in fairness and in the interest of true, non-fake reporting here on the Quorum Stream, we have to address the White House's official position. The defense is consistent and simple. President Trump and his family are not personally managing this $1.6 billion portfolio. The portfolio, they state, is held in a trust and managed by an independent, third-party financial institution. The official line is that these are passive investments, often mirroring recognized indices, meaning the financial manager is just buying a basket of assets and that the president himself had no direct knowledge or input on the Intel or JPMorgan purchases. They claim he is simply fulfilling his mandatory transparency requirements by filing the disclosures. However, this defense has a gaping hole. Unlike every president before him since the 1970s, Trump has never placed his assets in a true blind trust, which is managed by a trustee who has no prior relationship with the president and keeps the president completely in the dark about the holdings. Because the current trust is run by his children and associates, and because the president himself is a businessman whose brand is deeply tied to the companies and sectors he now invests in, the perception of conflict remains acute. Whether he makes the call or an associate does, the policy decisions coming from the White House are still creating value for a portfolio that ultimately benefits him. This is the core ethics debate. Does perception of conflict matter as much as proof of conflict? Beyond the Intel and JPMorgan headlines, what does this $82 million bond buying spree tell us about Trump's market outlook? It suggests two things. First, a defensive move. Bonds are generally safer than stocks, indicating a cautious approach in an election year marked by market volatility. Second, it's an opportunistic bet on sectors aligned with his pro-growth policy agenda. He's heavily invested in Wall Street banks like Goldman Sachs and Morgan Stanley, who benefit from financial deregulation, and chip makers like Broadcom and Qualcomm, who are central to domestic manufacturing pushes. This isn't just about political ethics, it's about understanding the financial signals being sent from the very top. When the most powerful man in the world places his personal bet on specific sectors, it suggests an expectation that his policies will continue to favor those industries, regardless of the ethical noise. For you, the viewer, this is a signal to watch. As the political and financial spheres continue to intertwine in this unprecedented way, our job here at the Quorum Stream is to keep separating the facts from the noise. We'll be tracking these disclosures closely as the implications for policy and profit only grow larger. If you found this breakdown valuable and you want to stay ahead of the curve on news like this, please do us a huge favor, like this video, subscribe to the channel, and share this with anyone who needs to hear the facts. Thank you so much for tuning in, and we'll see you in the next one.